Magandang araw sa inyong lahat mga ka-KJ. This is Ken and welcome to Earning with Ken and Jen. So, ang topic natin para sa ano to is Lesson 11, Accounting Cycle, Adjusting Entries. Learning objectives, to know what are adjusting entries, to know the examples of adjusting entries, and to know what is the accounting period, and to know the types of accounting period. So, adjusting entries. Adjusting entries are journal entries made at the end of an accounting period to update the accounts for transactions that have occurred but have not been recorded or to correct errors in previously recorded transactions. These entries are necessary to ensure that financial statements accurately reflect the company's financial position and performance. Adjusting entries can affect any of the accounts in the general ledger, such as revenues, expenses, assets, liabilities, and equity accounts. Common types of adjusting entries includes accruals, deferral, estimates, and corrections of errors. For example, an adjusting entry may be made to record revenue earned but not yet received or to recognize an expense that has been incurred but not yet paid. So, ang sinasabi po dito sa unang paragraph ay parang nag-update or parang kino-correct niya yung mga previously errors or previous na errors o yung mga transactions na kulang sa adjusting sa mga accounts ng mga journal entries or yung mga ledger or nung mga naka-record na sa trial balance. So parang may mga error pa sila doon na hindi na record or hindi na recognize ng kumpanya. Tapos sa pangalawa naman paragraph, parang ini-ensure ng company na talagang na-record ng maayos yung mga transactions gamit ang mga adjusting entries. Kaya dapat itong isagawa para magkaroon ng magandang reports at magkaroon ng magandang desisyon ang mga users. Sa pangatlong paragraph naman, yung mga types po ng um, adjusting entries na i-discuss natin maya-maya po. Adjusting entries are an important part of accounting process and are necessary to ensure that financial statements provide reliable and accurate information to users of the financial statement. So, yun nga po, sinasabi na parang accurate ang magiging desisyon ng users kapag nagkaroon ng adjusting entries. There can be several problems that arise in adjusting entries in accounting. Some common example include timing differences, adjusting entries that are made at the end of the accounting period, which means there may be timing differences between when a transaction occurs and when it is recorded. For example, if a company receives a bill for the services rendered at the end of the December but does not receive payment until January, an adjusting entry would need to be made to record the revenue in the correct period. Errors in initial recording. Mistakes can be made in the initial recording of transactions, which can require adjusting entries to correct. For example, if a company mistakenly records a payment as revenue, so it is actually a loan, an adjusting entry would need to be made to correct the error. So, sa timing differences, parang ano po yan yung nag-service ka sa kanya, tapos nagkaroon kayo ng um, magbabayad daw siya in account. So, mas malalim pa ang ating discussion po dito sa mga susunod na slides. Changes in estimates. Some adjusting entries are based on estimates such as depreciation of fixed assets. If the estimate is incorrect or changes over time, it can result in the need for adjusting entries to correct the account balance. So dito po yung mga tine-record natin yung mga accumulated depreciation expense, kagaya po yun ng mga tapos yung mga ano po, yung uncollectible accounts, doubtful accounts, bad debts, gano'n. Parang kasama po sila sa mga adjusting entries na kailangang i-correct sa end of the accounting period. Unrecorded transactions. Sometimes transactions may occur that have not been recorded, which can require adjusting entries to ensure that they are included in the financial statements. For example, if a company has accrued expenses for a service that has not yet been invoiced, an adjusting entry would need to be made to record the expense. Here are some principles that are involved in adjusting entries in the account. Accrual accounting. Adjusting entries are made under the accrual accounting system to record revenues and expenses when they are earned or incurred, not when cash is received or paid. So, sinasabi lang naman po dito na kapag ang services ay nagawa mo na o kung nag-occur na yung expenses o nagamit mo na yung expenses, saka lang niya i-record yung mga ito. Dahil parang ano po yan, nasa matching principle po tayo. Tapos, um, yung, tapos hindi siya involved ng cash. So, ibig sabihin, kahit na mag-involve siya ng cash, hindi pa rin niya i-record yung income dahil hindi pa naman niya na-earn. Okay, parang magkakaroon muna tayo ng unearned revenue, parang ganun po. So, matching principle, the matching principle requires that expenses can be recorded in the same period as the revenues they help to generate. Adjusting entries are made to match revenues with their related expenses, even if the actual payment of or receipts of cash occurs in the different period. So, parang magkakaroon tayo ng, ano dito, yung, kunwari nagkaroon ka ng revenue, dapat i-record mo rin yung mga expenses na nag-incur para mas accurate yung magkakuhang mga result. Time period principle. Time period principle requires that financial statements reflect the financial activities of a business over a specific period of time, usually a month, quarter, or a year. Adjusting entries are made at the end of each period to ensure that financial statements accurately reflect the financial activities of the period. So, sinasabi dito na parang magre-report ang company minsan na interim period or minsan monthly, minsan quarterly, minsan or kadalasan yearly. At kada end of this period, magkakaroon ng adjusting entries para magkaroon ng adjustment yung mga accounts na mali o yung mga transactions na may kulang o may mali para magkaroon ng accurate financial report. Accruals are adjustments made to record revenues or expenses that have been earned or incurred but have not yet been recorded. For example, if a company has provided services to a customer that has not yet invoiced for those services, an adjusting entry is made to recognize the revenue earned. So, kunwari, nagkaroon tayo ng services o nag-incur tayo ng expenses, tapos di pa natin record yung mga transactions na ito, kahit na na-earn na natin sila o na-incur na, kailangan magkaroon ng adjusting entries para ito ay magkaroon ng um, mas accurate na result or recording. Deferrals are adjustments made to record revenues or expenses that have been received or paid in advance but have not yet been recorded or incurred. For example, if a company has received payment for a customer for services that will be provided in the future, an adjusting entry is made to record the revenue when it is earned. So, ang madaling salita po, yung referrals po is kunwari nagkaroon na tayo ng advance payment sa mga ginawa nating services kagaya ng sa ano po, mga services sa barbers or sa salon tapos um, binayaran na tayo tapos di pa natin nakukuha yung ay di pa natin nagagawa. Ibig sabihin pa, mare-record yung paggawa nun kapag na-earn na or na-incur na, yung kung nagamit na or na-earn na, kung ang sinasabing na-earn na po is nagawa na natin yung serbisyo. So, nagawa na ng magsa-service yung serbisyo nila. Depreciation. Depreciation is the process of allocating the cost of a long-term asset over its useful life. Adjusting entries are made to the end to record the depreciation expense for the period and reduce the book value of the asset. So, allocated cost ng term asset. Ito yung mga useful life ng assets natin. Ibig sabihin po, habang na tumatagal, nagde-depreciate or bumabawas ang useful life o halaga kasi palagi nagagamit na nalalaspag po siya or parang nababawasan yung value kasi parang kunwari sa mga tools, pag may rust na siya, rustiness, parang gano'n. Kaya nababawasan yung value or book value ng asset. Accrued expenses. Accrued expenses are expenses that have been incurred but not yet paid. Adjusting entries are made to record the expenses that and the corresponding liability. Ito po, kunwari na-incur na natin or na yung expenses na na-incur na or nagamit na natin pero di pa natin nababayaran. So magkakaroon tayo ng adjusting entries para mabayaran ito at ma-record ito. Prepaid expenses. Prepaid expenses are expenses that have been paid in advance. Kabaliktaran po na accrued expenses ito. But not yet, but have not yet been incurred. Adjusting entries are made to record the expenses when it is incurred and reduce the prepaid asset. So, ibig sabihin po na unang-una sa lahat, parang nagbayad tayo ng mga expenses natin in advance. Tapos, kapag nagamit na natin, mababawasan yung asset o yung binayaran natin in advance. Tapos tapos nagamit na natin yun, tapos magiging itong expenses. So, parang yung asset naging expense mo na o nagamit mo na. Revenue recognition principle. Under the GAAP, revenue is recognized when it is earned, not necessarily when cash is received. Adjusting entries are made to record revenue that has still been earned but not made billed or collected. Ito yung parang sa accruals and the difference po. Materiality gap requires that adjusting entries be made only for material items, meaning items that are significant enough to affect the financial statements. Ang materiality kasi ay meron tayong mga tinatawag yan na value, yung or kung ano ang nature ng nangyaring loss. Kunwari, or gain pala, or loss or gain. Kunwari, may nagkaroon ng sunog, tapos ang dami na sunog. Material po yun. Pero kung konti lang naman yung sunog, hindi naman po. Parang mga value lang po is 1,000 over capital of 10 million, parang ganun. Tapos, kunwari, nawala ng, ay, hindi, yung nature pala. Ay, konti lang naman yung sunog pala nun. Sige. Tapos, kung yung nature po is, kunwari, nawala yung, ah, yung, yung 1,000 sa 10 million na value. Kunwari, nawala lang naman, ibig sabihin po nun, it's immaterial kasi hindi naman siya yung nawala lang naman, hindi naman niya may kumuha or may nagnakaw. Pero kung may nagnakaw po, kahit na 1,000 pa yan or kung anong value pa man yun, it is a material kasi dahil sa nature nito na crime po or parang ganun po. Dahil sa nature nito na ganun ka, um, hindi naman nawala lang or dahil may nagnakaw nga po. So consistency, the app requires that a company use consistent accounting methods for one period to the next. Adjusting entries should be made using the same accounting period methods as in previous periods unless a change in method is necessary. So consistency kung ano ginagamit natin ng mga principles, mga methods, mga at kung ano pa man ang mga ginagamit natin sa period na ito, dapat maging consistent tayo unless na kailangan natin yon baguhin. Full disclosure, GAAP requires that financial statements provide all necessary information to enable users to understand the financial position and performance of a company. Unjust entries should be disclosed in the footnotes in the financial statements. So, ito yung mga notes to financial statements natin na yung mga information na wala sa mga financial statements na kagaya ng cash flow as statement, income statement, balance sheet, yung mga at yung mga changes in equity. Basta yung mga statement na yun, yung mga information na wala doon, yung mga words baga, yung hindi financial in nature, basta yung mga words na kailangan na ipaliwanag natin, dapat nandun yun. Going concern, GAAP assumes that the company will continue to operate in the foreseeable future. Adjusting entries should be made in the assumptions that the company will continue to operate as a going concern. So, parang walang balakid po na magkakaroon tayo ng yung company ay mag-run in an infinite time. So, parang walang planong mag-close, parang ganun. Dapat ganun ang ating assumption. Here are some examples of adjusting entries and their solution. Problem: on December 31, 2022, the company incurred 2,000 pesos na lang natin po yung dollar, in salaries, wages that will be paid into January 2023. However, the company has not yet recorded this expense. Solution: the adjusting entry which would be to debit salaries and wages expense for 2,000 and credit salaries and wages payable, or accrued salaries, wages payable. So, ganun po kasi. Pwede na po yung ano yan, yung may accrued basta. Parang pwede rin yung normal na account lang na salaries and wages. Pwede rin accrued salaries, wages payable. Para malaman natin na ito pa ay accruals. Unearned revenues. The company received 1,500 pesos in advance for services that will be provided in January 2023. However, the company have not yet earned this revenue. Ibig sabihin, hindi pa niya nagagawa pero nabayaran na siya. The adjusted entry will be debit unearned revenue and credit revenue. So, kunwari, unang entry niya is cash, tapos unearned revenue. Mababaliktad na yung unearned revenue kasi yung unearned revenue is ano na-earn na siya or na-recognize na siya kasi nagawa na natin. Depreciation expense. The company purchased equipment for 10,500. 10,000 pala. 10,000 with a useful life of 5 years and no residual value. The company uses certain depreciation. The adjusted entry for the end of the first year would be to debit depreciation expense and credit accumulated depreciation. Kung paano nakuha yung depreciation, 10,000 divided by 5 years is equal to 1 year of depreciation. So, kung ang depreciation natin is 2,000, as susunod na naman year naman is 2,000 naman. Prepaid expenses. On December 1, 2022, the company paid 3,000 for rent for the period from December 1 to February 28. The company has not yet recorded a portion of the rent expense that relates to December 2022. So, ibig sabihin, yung isang month ng rent, hindi pa nila na-record. So, solution that just entry would be to debit rent expense and credit prepaid rent kasi nagamit na natin yung pinay na advance yung prepaid rent po. Okay. So, accrued revenues. On December 31, 2022, the company provided 1,200 in services to a client that will be billed in, January 2023. However, the company has not yet recorded this revenue. Solution: the adjusted entry will be accounts receivable and revenue. So, parang na na-earn na natin siya pero di pa tayo nabayaran. Na-earn na or nagawa na natin pero di pa tayo nababayaran ng customer. An accounting period is length. So, ito tayo yung accounting period. Accounting period. Accounting period is the length of time that a company uses to prepare its financial statements. Generally, there are four types of accounting periods, which are as follows. Fiscal year, yung 12-month po tayo dito. Kahit anong year, kahit anong month tayo magsimula basta 12 months po yung period na yun. So, that a company chooses to align its business cycle, it may begin in any but ends in exactly 12 months later. Fiscal years are commonly used by companies that have seasonal business cycles and that want to allow their accounting with their tax filing. Calendar year, ito naman yung calendar yung ibig sabihin saktong-saktong January 1 hanggang December 12, 31 yung period. So, this calendar year 12-month period that begins on January 1 and ends in January 31. Many companies use the calendar year as their accounting period because it is the most common period and makes it easier to compare their financial performance with other companies. Natural business year. Natural business year is yung mga seasonal o kung kunwari parang kung ano yung peak nilang time, doon sila magsisimula na mag-business tapos kung kailan siya hindi gano'n patok, doon sila mag-end. Parang ano po, 12-month din po siya, pero hindi siya. Pero parang isang uri siya ng fiscal year or calendar year. Pero hindi gano'n talaga. Parang ano lang, seasonal. Parang gano'n. In an accounting period that aligns with a company's natural business cycle, it may not necessarily consider the calendar or fiscal year. Instead, a company chooses a natural business year based on its operational and financial cycles. For example, a company generates most of its revenues during summer months, may choose a natural business year that runs to May to April instead of January to December. This would allow the company to align its financial reporting with its revenue generating activities, making it easier to plan and budget. The concept of the concept of a natural business year is often used by companies that have highly seasonal businesses or that operate in industries with unique cycles. By aligning their accounting period with their business cycle, their companies can better understand their financial performance and make informed decisions about future investments, cash flow management, and overall strategy. So parang nag-ano tayo, parang strategy nila ito na, di ba, ganito tayo dapat pag summer, ano tayo, parang ice candy po, no? Ice candy business. Pag summer, ano, bukas tayo. Pag, pag winter naman, ano, konti na lang na, okay, parang hindi tayo masyado active or parang ganun. Kung nakukuha po yun yung point. Okay po. Interim period. An interim period is a shorter period of time, typically less than a year, that company uses to report its financial results between the end of the accounting period and the end of the next accounting period. So, for example, if a company has a fiscal year end of December 31, an interim period would be a period between the January 1st and that at the end of the following fiscal year end. The company may report its financial results for the first 6 months of the fiscal year, which would be the interim period. So, parang ano po ito, yung sinasabi nila na monthly, bi-monthly, quarterly, at semi-annually. Para hindi po siya yung 1 year na cycle. Interim periods are often used by publicly traded companies to provide investors and stakeholders with more frequent updates on their financial performance. These reports are usually in the form of unaudited financial statements or quarterly financial statements, which are filed with regulatory bodies such as the Securities and Exchange Commissions in the United States at pwede din sa Pilipinas. So interim periods can also be used by companies for internal management purposes to track business performance and identify areas for improvement. So they can provide a snapshot of a company's financial health and allow for more frequent assessments of financial results which can inform strategy decisions and planning. Pero para mas umukor po ito sa mga taong nag-aano po, management accounting, yung sa loob ng company ang ginagawang pag-report o pag-file ng report. So, examples po, quarterly periods, monthly periods, half-year or semi-annual periods. Many publicly traded companies report their decisions on quarterly basis, which would be considered interim period. These periods typically cover 3 months and in March, June, September, and December. Um, Monthly periods may choose to report their financial results on a monthly basis, particularly if they are closely monitoring their cash flow and need to track expenses on a regular basis. Semi-annually or half-yearly or semi-annual. Some companies may choose to report their financial results on a half-yearly basis, which could cover a 6-month period. Seasonal naman, highly seasonal businesses, which retail or tourism may report their financial results on an interim basis to provide more frequent updates on their financial performance or during peak seasons. So hanggang dito na lamang po muna mga ka-KJ ang ating vlog sa ngayon. Please like, subscribe, and hit the notification bell for more updates galing sa amin natin. So ang references natin is OpenAI, Personal Communication, Research in March 14, 2023. So that's it. Ito po si Ken and this is Earning with Ken and Jen. Earn with us, even if it jumps. Bye and have a good